Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/The Smattering, to get access to the 10 best stocks to buy right now. Amazon just reported its third quarter earnings after the market closed on October 20th, and the stock is absolutely getting smashed. If you're watching this video, there's a very good chance you're trying to figure out, is this an opportunity to buy the dip, or are we starting to see some cracks in Amazon's armor right now? This is The Smattering. I'm Jason Hall. I'm joined by Jeff Santoro. Jeff, we're going to take a closer look at Amazon. How are you, buddy?
I'm doing well. Yeah, I'm doing better than Amazon's stock price is doing right now.
Yeah, this is one that it's going to take us a little bit of time to kind of put our heads around this one. I'm going to hit the high notes right here. Here's where the good stuff is. Revenue was up 15% in the quarter. This is the first time in a while we've seen double-digit revenue growth at Amazon. Let's talk about segment and different parts of its business. 20% sales growth in North America. It's a very good chance that inflation was one of the things that helped it drive that 20% revenue growth. Now we look at the other side of what's going on with currencies. International sales were down 5%. That was because the dollar's really strong. The euro and the pound are really weak, right? So you adjust for foreign exchange, converting those foreign currencies into dollars. Revenue was up about 12%. Again, there's some inflation that's probably playing a role there. AWS continues to be kind of the fuel that's driving the engine here. Revenue was up 27% year over year. Adjusting for foreign exchange was up about 28%. Jeff, that's the top line. Let's talk about the bottom line and look at operating income. The numbers aren't quite so impressive when we do that, are they?
Now, when you dig into the operating income, or I should say in most cases, operating losses, it does get a little bit more concerning. So looking at the North American sales, or North American segment, and by revenue, that's the largest part of the business. That's all of the North American e-commerce. That's about 62% of the company based on revenue. But when you look at operating income, this is actually the fourth quarter in a row that they've posted an operating loss for the North American segment. And
about a $400 million loss.
$400 million loss in this quarter. And that's compared to actually a $880 million net income in the year ago quarter. So that's a pretty big swing in a bad direction. Turning to international, the same story there. Operating loss in this quarter was $2.5 billion, and that's compared to about $900 million of a net loss in the year ago quarter. Now, this is not new. This has been trending in this direction, but what has saved Amazon for the past several quarters is that the operating income for AWS has kind of, pulled the other segments up with it.
Right. It's cloud services business as a percentage of revenue is the smallest, or maybe I think it's the smallest segment, but it is by far the profit center. It's a very profitable business, and it's the thing that's been paying for those operating losses in its retail business, right?
Yeah, exactly. And in the last several quarters, the year-over-year operating income gains have been 36%, 57%, 48%. So it's really been kind of, carrying water for the other segments. This quarter still up, but only 11%. So when you see the operating loss,
its operating margin in AWS actually declined in the quarter.
Right. So when you see it's trending in the absolute wrong direction for the e-commerce side of the business. And now you're starting to see, now granted, it's just one quarter, but a little bit of a deceleration in terms of growth in AWS. If that trend continues, could be long-term pain for Amazon investors, not just short-term.
Yeah. So we see higher costs helping drive its revenue higher, but we also know the labor issues that it's dealt with. We know rising costs are also affecting its business. Its costs are going up. We're seeing higher competition. Google Cloud, Alphabet just reported Google Cloud revenue is growing by double digits as well. It's growing very quickly. So there's more competition as more businesses try to take share in this cloud space. Thinking about, Jeff, as we try to wrap this up, thinking about where Amazon is right now, you said it. It's not unexpected that those operating losses are there. We know it's spending a lot of money to expand its distribution footprint for its e-commerce business. We know it's spending money to grow AWS and add capacity there. We know there's intent with those things that it's spending on. We also know that there are some real economic pressures. The economy is not necessarily super healthy. There's concerns that we could see recession within a year if the Fed keeps raising interest rates. So thinking about all that and kind of putting it together, are these just short-term pressures for Amazon? It's going to just kind of manage through and it's going to come out this the other side? Or do you think the market, with the big haircut that we've seen so far in after hours, is readjusting expectations based on the fact that Amazon's ability to return to the kind of profitability levels we saw maybe a year ago, it's maybe going to take it a little bit longer than expected to get back to those levels?
I think it is going to take it a little bit longer than maybe we're expecting to get back to those levels. So I kind of get why the market is reacting the way it is. We'll see if it stays the same way when it opens tomorrow. Sometimes you see some differences in after hours trading versus when the market actually opens. But it's hard to make the case that that this is going to be turned around in the short term, considering how the last couple quarters have gone and considering all the macroeconomic concerns you just laid out. So we may be seeing Amazon trade for lower multiples for the next couple quarters as they sort all this out.